You and I have known each other for a while. You touch a lot of things, man. It's really fun. You are...
Steve Bennet is a seasoned CFO, investor, and educator at San Jose State University, bridging traditional finance with blockchain innovation through startups, ventures, and teaching.
How are you seeing the students you're engaging with, what they're learning about Bitcoin and blockchain?
I've had some students that have done quite well with cryptos and NFTs that have paid for their education or even funded kind of the early days of their startups. Probably 2016, 2017, around then, that became the hottest sector of interest in the students that I was teaching.
How do you think about the emerging Treasury strategy?
If you have a large treasury and your business is international in nature, I would actually recommend putting some of that allocation into crypto.
When I got started, there were a lot of things like e-commerce opportunities that people were trying. And then you look 10, 15 years later and they became real businesses. What do you see now when you look and go, well, it's 15 years later, but this stuff actually starting to be meaningful?
Maybe to double click on that a little bit, what got you excited as a finance guy?
Yeah, well, I mean, as a finance guy, I think you look at the...
Hey, everybody. Welcome back to another episode of Redefined, the podcast all about blockchain, crypto, and the new economy. I'm Megan Guy. I'm here with my co-host, Jeremy Allman. Jeremy, how you doing today?
Megan, what's up? What's up, everyone? Another awesome day and another awesome guest. I'm really excited. We've got here with me Steve Bennet. What's up, Steve?
Hey, great to be here. It was nice to make the drive down from Palo Alto to Santa Cruz and looking forward to the discussion.
Yeah, we don't always have any people in the studio, so we appreciate it. It's fun. You and I have known each other for a while. You're kind of, you touch a lot of things, man. It's really fun. You are a prolific angel investor. You're a professor at the university nearby. And then you also are like kind of a well-known startup CFO. So you touch a bunch of stuff, which is awesome. And I think, you and I got to know each other in really, really early days in Bitcoin and blockchain. And you were pretty early for being a finance guy and being a professor. You were pretty early into that space. So I'd love you to kind of like take us back, I don't know, a decade and plus, and just how you got in that space, how you got involved with Bitcoin and Ripple and some other things back before, it was the giant industry and, the fourth or fifth largest asset in the world.
Yeah, I mean, and thanks again, Megan and Jeremy, for having me here. So like a lot in my career, it's been pretty haphazard. I think it started in large part because early in my career, I realized I wasn't very good at working for other people. I found that I felt I was smarter. I knew a lot of things that they didn't know, and I didn't really think that they should be running the company. And when you're working in a corporate environment, that doesn't always work out so well.
You generally get fired.
You get fired. Yeah, I got fired a couple times, so it's all good. One time the guy actually took me out to a bar for a drink. I guess he didn't want to do it in the office. I don't know what he thought I'd do, but I hung around. I think he kept the tab going after he had left. I figured, well, I'll just sit here and keep drinking because I got plenty of time now.
HR doesn't usually approve of that kind of thing.
No. I don't know if they do. So I kind of found my way into, what I think I called at the time, this is back in the early 90s, a portfolio career where I was, similar to a venture capitalist investing in a number of companies. I decided to invest personally in several careers so I could both learn on the job, but also kind of keep myself interested, do different things. And that's how I became a professor / angel investor / CFO. And that's how we met. And I think it was probably maybe a dozen years ago when you were going through an accelerator and I was running an accelerator at the same time, Crosscoin Ventures. So that was our start with 3 partners into investing into blockchain and crypto. And we did that in conjunction with Ripple Labs, which, again, very early on for them. I assume you've probably had some discussion around.
And you were kind of like a somewhat straight man in financial services, involved with some pretty wild characters back then, right? So, Crosscoin was investing in, all kinds of blockchain companies super early. It was like 2014, probably.
Yeah, we started, I think it was late 2013. Yeah. We were probably most active 2014 and early 2015.
Yeah.
And you talk about an interesting set of characters. I mean, and this was a whole new world for me. And again, we're going to get into some of my academic piece, but I had some students that were pretty interested in Bitcoin. And I think this was 2012, I remember, because this is when I started, learning about it. And I think the Bitcoin price it had gone up to like 30, 40, $50 by then. And some of my students started getting into it and buying it. I didn't actually get in at all materially till it was around 200, and it's still gone up a little bit from 200.
But 30 was a bubble back then.
30 was, there were a bunch of bubbles, but I remember just meeting, and we'd have people that would wander into the office there. I think just kind of off the street. It's almost like summer of love, let's move that ahead, 35, 40 years, and people would see, Ripple, blockchain, crypto, and just kind of walk into our office and wander around.
Maybe to double click on that a little bit, what were like the problems that you saw Bitcoin solving? Like what got you excited as a finance guy?
Yeah, well, I mean, as a finance guy, I think you look at the payment rails and see all the friction. So when, and that's a lot of what, Ripple was about. So they, they're an interesting case study because, have an enterprise business working with banks, but that was going to take a really long time to get that business going. And, oh, by the way, we have 100 billion of this
pre-mined
XRP
token that may or may not be a security. But
yes. So we're not going to dive into that right now. Which, if you look at the business today and the balance sheet, it's still very heavily on the XRP, but the enterprise business is taking off. But now we're 12 years later. So that's a long time. So I looked at the friction. A lot of the the startups we looked at were, payment transfer businesses. So mobile payments, how do we get money from one of the ones we invested in? I think it was saldo.mx was a payment card to get cash easily from here to family in Mexico, because as we know, if you go through Western Union or you go obviously wire, anything else, one, there's not access, you need bank account, but two, the cost of doing that is so much. So we looked at a lot of businesses like that, and there were startups in a lot in Africa, Latin America, South America. So that was one area. I think I looked at some data back in 2013, maybe it was IRS data from 2013 tax year, and the number of people that paid gains on crypto reported on their tax return was under 100. And I was one of those under 100. So I always figured,
wow,
even if I'm not doing it right, if I ever get audited, I have that card to play and say, look, I've been trying to do the right thing. It's really hard to figure out your basis when you're going back and forth between different coins, and when you actually becomes liquid, and we were getting paid in it and reporting that as income. So I think that was a big problem, and maybe that's not a kind of a central problem, but certainly what you guys were working on.
I'm curious, you go back to the tax one for a minute, because I mean, if anything, you'll go down in the history books as one of the first 100 people to pay taxes on your Bitcoin. That's, a unique Venn diagram. I love it.
Yes. I do wonder what percentage are paying now. And
voting accidents, I think, are a pretty big problem still.
Yeah. And, again, it was, kind of something. I remember my accountant at the time, she had no clue what the stuff was. And now 12 years later, I think she has very little clue, but, maybe a little bit of clue. So basically, every year, I just kind of give her a number. This is what I sold. This is the basis. And this is, this is the income I have.
I mean, the simple solve with that is to never sell and just hodl, and then you're fine. But, at a practical level, I think,
and again, with a lot of things, with kind of 2020 hindsight, yes, that's always the call. I sold a little bit of Ethereum at 4,000 6 or 9 months ago, and then it got knocked down, and now it's back over 4,000. But plenty. I've been in this world. I don't play a lot of poker, but I do have a philosophy of taking some money off the table. I think that's good practice. Having seen, I saw a lot of ugly things in the late '90s when employees exercised incentive stock options,
Right.
were forced to pay taxes on income that wasn't real income. They didn't cash out at that point. Then the company went under, and then they owe a huge tax bill and they have no way to pay it. So
Right.
that's kind of a different kind of case. But if you look at, also, it's a way to invest back into the ecosystem. So
Yeah.
there's no, there's no 1031 exchange in tech investing, but we do have QSBS, and there are ways to reinvest. So
That's right. That's right.
I think that's good practice for entrepreneurs to help seed the next generation of entrepreneurs, and you can do that in other ways. But
When I think about, you're talking about kind of both the tax strategy and sort of your own internal balance sheet, how you think about it. But you also advise companies.
Yeah.
And both the reporting rules in FASB, the tax kind of clarity is now more there than it was way back then. And I think because of that, because you have more clarity, you're having companies now much more engaged, and particularly around Bitcoin, where they're using it as a store of value and a hard asset for part of their treasury. What's your kind of view on that? Like, how do you think, you oftentimes advise companies, you are a stand-in CFO for a lot of companies. Like, how do you think about the emerging treasury strategy that's kind of hot right now?
Yeah, I mean, to be honest, I don't have much involvement there, and the companies that I work directly with are startups who are spending venture capital money on growing their businesses and reaching the next milestone. So treasury policies tend to be pretty conservative. So for companies that are taking a lot of risks, the treasury policies, and I don't even know, I haven't done one probably in 3 or 4 years, but there was a template going back to the to the 80s in terms of what some VC came up with at that point, where you could invest this money in very conservative treasuries and CDs. So later stage companies, public companies, obviously we've seen MicroStrategy and others that have gone very long on Bitcoin, and that's worked out well. But if you do have a large treasury and your business is international in nature, I would actually recommend putting some of that allocation into crypto. If you just look at it across what your entire allocation should be. I mean, I think there's certainly risks in holding U.S. treasuries these days. I mean, when we look at the political environment, and where is the U.S. going to be in 5 years and 10 years? I don't know. I'm looking personally at doing more international. So, I guess from a startup vantage point, VCs aren't looking to invest in your company to then invest in other areas that they can invest in. So it's laser focused, and that's always the issue with an entrepreneur, right? You're taking money from investors who have this diversified portfolio, yet all your eggs are in one basket. So and I think that speaks to what a startup CFO would do. So as for an early stage company where you have 5 or 10 or 20 million, I think that's pretty hard to put that cash at risk when you're going to be burning $1 or $2 million a month. But that's just one guy's take. I'd be interested in what Megan, you have a fund, you invest. So what would you think if you invested in a company and they took unrelated to their business and tokens, but just took some of that and put it into crypto across the board? Maybe you have them.
Funny question to ask in the presence of Jeremy Almond.
Yeah.
Yeah, I think
we just say we're the outliers.
Yeah.
Like ignoring us for a minute.
Yes, ignoring Paystand. No, I totally agree with you, Steve. I think when we make investments, we're thinking about pools of risk and which risks we can manage and which risks we are happy kind of having exposure to. And I would say typically thinking about crypto and the digital assets space is very different than thinking about, a pure play software or an AI business or something like that. Where I think there can be, though, a little bit of utility, and where we've seen, with some companies we've looked at in the past, is particularly when folks are offshoring a fair amount of their talent, and in economies where maybe the currency is far less stable than it is in the U.S. As kind of a payroll solution, it's been really helpful, I think, in some instances, to be able to pay folks and hire engineers, with payment in Bitcoin, using some of these newer, kind of payroll rails that people have built with stable coins. But outside of kind of a very specific operational use case, yeah, I wouldn't really probably want our cash sitting on a balance sheet being invested in a whole bunch of, risky stuff.
No, as a CFO, that's a problem that we've always faced. No, I'm getting back to just a real operational problem is paying contractors and employees in other geographies. So you have, and I think, I don't know, I've used Deal as a customer and kind of paying contractors, and I think they've been looking at addressing that, but it was always such a challenge paying people and more the contractors than the employees, but kind of on both sides. So again, kind of back where I started on all this friction, and that's something that shouldn't happen. We shouldn't be. This is 2025 now. We should not be trying to figure out how to exchange from one currency to another currency. We're working together around the globe, so that's something that should be easy and instantaneous to track and pay someone.
Yeah, I think it's clear to me the payroll and kind of international bill pay contractor payments, emerging use case. You've got both it used in Bitcoin and stablecoins, a pretty significant portion of stablecoin volume. So, I think that one is something that people well accept. Deal, Bitwage. We had the founder of Bitwage on. Those are really, really interesting companies. I think I will take maybe a little bit of the other side, though, on the Treasury part, because I think, look, the goal of Treasury is capital preservation, right? And so I think on one side you could say is it an investment? And I would categorize crypto differently than Bitcoin, which is, digital gold in one side of the capital equation. And I think, you have even had stories you've told me offline, and I have a lot of other stories that are very similar, where the startup ended up having significant leverage in their operating because their Bitcoin actually that was sitting on the balance sheet actually increased in value. And so their run rate increased, right? And their burn rate, relative to it going down, decreased. And then I also think the other thing that's really interesting is you lived through the Silicon Valley bank crisis. You were, you knew you were probably invested in a lot of those startups. I got a lot of calls during that period of, I have $10 million of VC money just sitting on the balance sheet, and I think it just went away, and I can't pay my payroll. So, I would maybe push back a little bit on one value is going up, the other value in dollars is going down, and maybe those dollars aren't always as safe as we think they are. So, maybe the venture capitalist doesn't want 100% of your assets to be in digital.
I agree, and I would not. Well, there were a number of companies, obviously, that get venture funding from Sand Hill Road, and they've never. These are technical entrepreneurs. They have no experience on the business or finance side, and the VC says, "Okay, here's the contact for Silicon Valley Bank. Just go and kind of let them run with it." So, the VCs are definitely not pushing that anymore. Even if they thought about it, they're going to let the companies make the decision. Yeah. Funny thing about the Silicon Valley Bank thing was, I recall this was 2 years ago, March, and my daughter was getting married the next day. And so we were doing all the prep stuff the day before, and all of a sudden my phone starts blowing up with everybody, either portfolio companies saying, help, I don't know what to do, or bragging, hey, we're not in Silicon Valley Bank. But then, 10 minutes later, they say, well, we're actually at First Republic. Maybe that's not so good either. So, yeah, I mean, again, it depends on how much you have. So it is capital preservation. Also, if you're going to take significant capital in, and you've got a lot of companies that are taking capital because it's cheap, certainly, if we're looking at 2021, 2022, and you don't actually need that capital, so it's going to sit on the balance sheet. In that case, yeah, let's think about what you can do with it. And I've seen some that have invested into ecosystems, so maybe you're making some investments in other startups, and maybe you're taking tokens through that, and maybe you're taking a piece and putting that into Bitcoin or other cryptos. So I think that's fine, but I'm thinking more in terms of more traditional funding where you're taking 12 to 18 months of funding, and you got to hit milestones. And if for somehow you make a bad decision and that money goes away and you don't have access, through Silicon Valley Bank, that could kill your company and kill the opportunity, because what you're building is going to return, if you do this well, is going to return, 10x, 100x. And yeah, maybe you could do that with your balance sheet, but that's not what your business is. And if you want to be in that business, then, well, we're not going to. I'm sure you've had plenty of time to talk about FTX and Alameda. We're not going there at all today.
I mean, I think that's the counterpoint, right, to this SVB example. Like,
yep.
We can cherry pick on both sides. I think examples of what we thought was a safe store of value having its value cut in half, or being unable to be liquid or accessed. I think the issue with these companies is kind of exactly what you hit on, Steve, which is you're operating on a really short time frame in sort of the scheme of a business's life, right? You've got 12 to 24 months of cash. And so, from sort of an investor and like a board perspective, I think it's very hard to justify putting funding into something that, even if the trajectory long-term looks like it's going up, it's a stable store of value, right? Like if FTX happens and all your treasury is sitting in Bitcoin, the big difference between that and SVB is you don't have a government that's going to step in and say, okay, we need to make sure, these banks get sorted out. Like these companies don't go out of business. It was a very stressful couple of weeks. And I'm sure there are some stories, that are tragic, of companies that didn't come through that okay. But I think, yes, a bank is maybe risky in some instances too, but it's also backstopped by the government in a way that to date, the blockchain and like Bitcoin economy has not been.
Yeah, I mean, I'd love to do a case study, and maybe there's companies like this. Maybe one of you know about this, but is there a company that took their funding, kind of invested heavily in crypto, their original business didn't make it, and all of a sudden they are, they have a ton of capital, and they can either return that to the investors, or they can build something else, or they can turn into a financial services firm. There's got to be an example, and I'm sure maybe I've read about something. Can you think of anything?
Well, yeah, I guess like I'm balancing here Megan's thought about like the bank intervention, and it's making me want to like go Keynesian economics, but I'll hold my Keynesian like rant for a minute. Yeah, I mean, I think what you're seeing in the public markets, like MicroStrategy is that example,
yes,
right?
Yes,
like
yeah.
MicroStrategy at the end of the day, it wasn't a terribly scaled company. It's been in the public markets for 20 years. Everybody kind of looks at it in the Bitcoin game they're playing today, but it had a 20-year legacy history of being a roughly 400 million in ARR operating business that sold to CFOs, people you and I spent a lot of time with.
Yep.
And I think their view was, he talks a lot about these walking dead companies, whether they're private or public, which is you have to beat the hurdle for, as an investment, you really need to beat the hurdle rate of not only just QQQ, but now like, the Magnificent Seven or whatever. And so if you're growing 5, 10, 20% a year, it might not be actually creating shareholder value. So I think what's interesting to me is operating companies that do generate revenue or especially free cash flow profit, that are able to actually like, sort of make their balance sheet more sturdy that's very interesting. The public markets are testing that right now. I don't think it's nearly as in vogue yet in private markets, but if I was to give a hot take, I would say I actually think eventually it'll be even more critical in the private markets, because operating businesses that generate real revenue do have leverage. I think I'm actually more worried about treasury companies that just put a lot of Bitcoin on the balance sheet, go public, have a little bit of a credit leverage game, and are just trading at a premium, but they're not actually real operating businesses. But the real operating businesses are super interesting. That are doing
well,
that.
I mean, now that I'm thinking about it and going back earlier in the conversation, of my experience, Ripple in some ways certainly falls into that category a bit. If you look at how the company is valued, and that's something as an investor, and they started 3 years ago doing tender offers to shareholders because one SEC lawsuit was still going on. Right. So there was no way they were going to go public while that was happening. Even after that was settled, I think they made the decision that it would be difficult for Ripple to be a public company. So they don't need to go public, obviously, for capital, have a large shareholder base, and they've been very good about secondary market transactions and doing these tender offers. But if you look at how the business is valued, it's actually valued at a discount of what kind of the market value of the XRP would be. Obviously, you couldn't sell all that at once. So the question is, what percentage should it be? Is MicroStrategy a comp? And I think that's something that they've looked at, because MicroStrategy, I believe, has a multiple on their holdings versus having a discount. And then you look at the two operating businesses. So analysts must have a field day in terms of going through and trying to figure out how do you look at growth and all these types of things.
Yeah. Again, though, I think these are businesses. This is really different than talking about doing this at a startup.
Yes.
This is like a different skill set and being able to manage this level of volatility and treasury strategy that like you just don't have. I mean, Jeremy, when you started Paystand, you were probably the CFO for half the time, alongside being the CEO and the COO, right? Like,
I think he was, because he says, "Steve, please come down to Scotts Valley. I've got 17 questions. I think it'll be easier to go through it in person than get on the phone." But I think he was doing that. Yeah.
I think a couple of times I actually asked you because we were, as a regulated entity, as a PayFac, we had auditors pretty early on. And I think one of the challenges we had to solve is just with digital assets, how do you communicate to auditors? And I think what's interesting now is, you've got the big auditors now have entire divisions around digital assets. But it was quite mysterious back then on, how did you mark it? Where did you record it? What did you do with things that were on your balance sheet? What were the tax reporting, requirements? I think it's a testament to the industry growing so much in, whatever dozen years is, neither did people know, nor were there software and services. And now there's entire industries that just support that tax, audit, compliance, all around digital assets, which I think is pretty cool.
Yeah, Steve, how are you seeing kind of like flipping back more to sort of the academic side and like the students you're engaging with? What are the questions they're asking, and like where are they most interested to dig in this alongside of like a more traditional finance curriculum? Because sometimes they're two totally different philosophies and schools of thought. So I'm curious how that integrates.
Sorry, I was just having a little trouble hearing. You're talking about kind of the academic piece and my students?
Yeah, like where are they most curious, and how are they syncing up kind of what they're learning about Bitcoin and blockchain versus kind of what they're learning maybe in traditional economics classes and, understanding about central banking and all of that. Like, what are kind of the conversations that you're having with them?
Yeah, no, that's very interesting. And kind of going back, I think I was talking to, maybe I was talking to both of you on a pre-call we had yesterday that, I've had some students that have, done quite well with cryptos and NFTs that have paid for their education or even funded kind of the early days of their startup. So there are definitely some that are, kind of into it and very interested, and others that are looking at this, as you said, taking classes from, theoretical finance classes from professors and saying, hey, this stuff you're talking about is all great, and central banks and this and that, but do you have any experience in this new world of finance? And this is something that I want to get into. And, I think there's a big opportunity here. And I'd say probably going back, I talked a little bit about very early on when there were a few students back in 2012 kind of looking at Bitcoin and getting interested. And then it was probably, then I could share my experience when we were doing cross-coin ventures with Ripple. But then probably 2016, 2017, around then, I'd say that became the hottest sector of interest in the students that I was teaching. And then it jumped from there into AI, then back a little bit to blockchain and crypto. And I think now kind of both blockchain, crypto, and AI are both pretty high in their thoughts and interests. So definitely a lot of interest. I don't teach. When I first came to San Jose State, I had taught entrepreneurship at Berkeley for a number of years before that, from mid-90s into early 2000s. And I got brought they needed somebody last minute to teach corporate finance. And this was like 3 weeks before the semester was starting. And I said yes. And then I thought, wait a second, nothing I do as a startup CFO is related to traditional corporate finance. I mean, the definition of entrepreneurship is the relentless pursuit of opportunity without, thinking about the tangible resources currently controlled. So without regard to those resources, and very different from allocating resources that you do from a large enterprise and capital budgeting and, CAPM pricing model, all this stuff. So I had to learn it and kind of stay a week ahead of the students. So I could kind of do that and get through it, but I knew I was there to teach the entrepreneurial finance. So what I do as a startup CFO, it's really about business models, about financing, about spending the capital wisely, about, playing intermediary between the CEO and the board. You're getting pulled in both directions. You end up playing shrink in a lot of cases. So it's a lot of people issues. So just very different. It's the one role that I found when I started doing this 30 years ago that you could do on a part-time basis. Now there's fractional this, fractional that. But then nobody wanted to hire anybody as a part-time marketing lead or business development or God forbid technology. So, that has all changed, but that's kind of how I built this. So as a startup CFO, that's the role I'm playing, the hat I'm wearing, but I'm really doing a lot of different things. So very different from traditional finance and economic theory, which, I think students are probably, some are very interested in that, and some may go in academic roles or go into, get a PhD and go into corporate finance or quantitative trading. And then some of those people have moved onto crypto side or do hedge funds that are doing crossover. But from my perspective, I've always been much more operational. And a lot of the students that that take my classes are very interested in either starting their own company or working at a startup, which is why one of the classes I teach, all the students do an internship at a startup or venture firm as part of the class. And we've had a few at Paystand, and hopefully they've worked out well. But it's really interesting when they come back to share their experience with the other students who are doing internships in mobile or health tech or life sciences or wherever they might be.
Yeah, it's interesting. You just keyed on this. So literally before we came into tape, I just watched the capstone of our internship class for the summer. We kind of do cohorts, and it was about 30 students kind of across our, whatever global organization. And there were two themes that I think are so fascinating because they were themes that I think it's such the most interesting time to be alive, right? The theme of the transformation of money, and then the theme of transformation of labor, right? So money and economics and AI are really, I think, I believe young people are probably more excited than I've ever seen. It reminds me of like being in college in the late 90s.
Excited and scared.
Excited and scared. Yeah.
Yeah, I would say that. Okay, maybe, but what I would say is that fear is turning into actual like real world work, because and this almost makes me feel a little bit old now, but I look at maybe the cohorts that came for the last prior 10 years, and tech was really hot. There had really high expectations. I didn't see a lot of people who came in and they'd already been coding in the background for a couple of years or doing all these things. Now I look at the kids and they are going to pass most of like our generation so fast. I kind of look in the projects they're doing and I'm like, okay, can you explain that to the boomer in the room, like how that agent works? It's really exciting. Their energy is infectious. And I want to talk about one area.
Yeah, I mean, I've been having a lot of conversations about this of late, and I think the labor piece definitely, and I've been looking a lot, and one of the things that I look at and what I've seen with students, again, that I've been teaching. I started teaching adult ed back in the 90s, but I've been teaching undergrads and grad students for the last 20 years, and dramatic changes both in business students that are now making sure they can code, but also a market shift. And I think COVID is probably the dividing line. So those that were in university before COVID and after COVID, I think the mindset is different. And I think you probably have the students here who are, if you look at the excitement versus fear spectrum, are much more on the excitement. But I think the student population as a whole is probably more even or more kind of weighted down on fear. And I think that's a big issue. I'm board chair of a nonprofit called Scholar Match, where we offer mentoring and scholarships to low-income first-generation students. And for a student who's first in their family to go to college, you have their families for, all these years was pushing them. This is going to be the biggest thing in our family ever. And now they're questioning the value of that education if you're not going to be able to come out and get a job upon graduation. And it's really about, creating that job, creating that career, and being experiential in the education. So I think traditional, kind of the traditional lecture and exam college experience cannot continue. That does not work. There's too many other ways to learn that. So I don't know if that's at all what you were going to get into or lean to, but I think it's students that are working on projects, finding teams while they're in school, interning and figuring out, okay, how am I going to own my career? And I'm not obviously going to be able to count on just going to a company and working there. And so I think that's some of the changes. And a lot of what we're going to see through AI is figuring out, becoming that AI expert, making sure that you're using the tools and you're using the latest tools and you're using them more effectively than anybody else. And that's how you're going to leapfrog versus being scared. And certainly being in an academic community, it's unbelievable how much time faculty spend on trying to decipher if people are using AI, figure out how they can stop them from using the AI, rather than saying, okay, let's use this together. Let's write prompts together. Let's build things together. Let's learn this together.
Don't use the internet to research. Oh my gosh, right? Like that. To me, there's no more like, okay, boomer kind of like thing. And I think this is you're talking about the first generation piece. I recently interviewed the CEO of a digital nest, which helps first generation kids in kind of the surrounding area of Silicon Valley get access to tech jobs and education. And one of the things we're talking about is like,
I'd love to connect with him, by the way.
Yeah, it's a phenomenal program, and we're fortunate to help with them on the philanthropy side. But I think the cool thing there to me is like, for the kids that are in a situation like that, my message to them is constantly like, that is your opportunity. Their fear is your opportunity. Like, my message to them is like, if you're first generation and you're like trying to come up, there is no better time to come up than when there's like dislocation. And the reality is, I think the dislocation that's happening is actually in prior generations that don't get it. So if you look at like people are internet native, so thinking about internet native money is not crazy to somebody who's, you know, Gen Z or Gen Alpha. When you look at, I'll just take our interns, like our more seasoned professional folks, when they think AI, they think ChatGPT. Like, whereas like, you know, the interns and the younger generation are already programming and self-driving agents. They're already like, you know, tuning the weights on models. And like, you know, the old person is literally like, let me talk to this, like, you know, a chatbot, right? So those guys are cooked to me. So I think
I
like
think though, I think the piece though that is missing and like where I would encourage like young people to lean in, it's understand the skills, like, you know, get really good, as you said, like be AI native. But like it's also then being able to communicate that to understand the depth of what's going on when you're tuning those weights, right? And to be able to then engage and collaborate across an organization, right? Because I think the jobs that disappear first are the ones that are, you know, algorithmic, right? And kind of skills based only. The place where I think, and I think you're seeing this in the hiring data too, like something I saw, I think just this morning or yesterday was, we're seeing an acceleration in hiring opportunities at AI and tech companies for kind of mid and senior level workers, and it's contracting at the most junior levels. And so I think those, you know, very human people skills and management skills and being able to communicate why the work you're doing connects and how it links is where, you know, the people that have both the baseline facility with the AI and all the different tooling out there, but then can also plug it into other people's work streams and understand how they make those folks more efficient and the company as a whole. Like that to me is where the real opportunity is.
I don't know. I'll take the other side of the bet. We'll find out who, you know, if you look at the large labor transformations in places like Microsoft and Facebook, it's the mid-level managers who are getting squeezed, right? Because like you either have, you know, really senior people who kind of know the industry in and out and, you know, can help do what you're talking about, which is mentor, you know, the young people into like practical applications. And then the young people who are actually just like, they're just running at 10x faster speeds. It's the same thing to me as like, you know, when you got involved in the internet, you know, when it was commercialized, and then the people who just done business before the internet for 30 or 40 years, they just couldn't keep up. So I actually think the bulge will be more senior talent will remain and they will adapt and they have the background. And then you have like young people who are just, it's just crazy how native they are. We have cases where, you know, young engineers, two young engineers in a matter of a couple of weeks, like folks that are maybe a year or two out of college, will outprogram with agentic tech, you know, senior engineers by an order of magnitude. Like I literally watched a project
and then they'll get a $250 million offer from Meta or Google to
great.
Yeah,
great. Like, right. Like that's the labor transformation, I think.
But why shouldn't these genius AI kids get comparable packages to professional athletes, you know?
Well, and I think even in the U.S. like economy, there's a whole desire to sort of reindustrialize the U.S. economy. And so, how do you do that? You're not going to beat China at you know, building, you know, another 1,000 people on the manufacturing floor. But you know, we service a lot of kind of real economy companies, and the way you get there is, you know, high efficiency, intelligent, agentic work that's going to outperform. And I think that's an opportunity for America to lead. And I think it's an opportunity for students to be really, really excited. You know, we can be the leader in, you know, transformation of money, transformation of labor. It's what a time to be alive.
Yeah, I mean, I take my students on a startup tour. We visit a bunch of startups, venture firms towards the end of the semester for the class that does the internship. So this is the Entrepreneurship Lab, which is really kind of a petri dish of entrepreneurship where we throw everything in, mix it together, and see what comes out. And I remember a couple of years ago, we went and visited Adeo Ressi, who's CEO of one of my favorite portfolio companies, along with Paystand, of course. And he started the Funded back in the day and some others, but Decile and VC Lab is really transforming the venture industry, creating hundreds of new emerging managers and he had also started the Founder Institute, which VC Lab came out of. And he was talking to the students, and one of the things he said, this was such a downer. It's every job you thought you were going to get when you graduate college next year, gone. AI killing every job. And I'm not there, but I remember it was like 3:00 on a Friday afternoon. I see all the faces on the students going down and thinking, what am I going to tell my parents? What am I going to tell my significant other? What's going on here? I spent all this time going through college, and it was a waste. And then, fortunately, that was the last thing we had before we went over to the Alpine Inn up in Portola Valley for food and beer to, kind of extend the conversation and kind of go a little bit deeper, and said, no, you don't need to do those jobs. There's going to be other jobs, and you can be doing things a lot more impactful, a lot more fun, and create a lot more value. So I think that's where we are. I just don't know, the volume of those versus what we had 7, 8, 9 years ago, all these kids coming out of coding boot camps. You can come, you can have any degree, no degree, come here for 2 months, and you can have a, starting software engineer job wherever. They're just dying to hire you. Those are the ones that are gone. I assume most of those coding boot camps are gone.
Yeah.
So there will be, some students that will suffer and may not be, right for this kind of new economy job. So that's what we have to figure out. And I think there's a workforce component to this, because we can't just say, well, great for this segment of students, but everybody else, figure it out, because I think that's partially what's created a lot of the political and social environment that we're in today, people that felt like they were left behind. So we have to figure out ways that we can, help get everybody involved here.
Yeah, I think one of the things you're talking about is certainly with any massive transformation, like, the Industrial Revolution or whatever, there's, sort of huge new industries that pop up that's really hard to imagine. It's just really hard to imagine what's on the other side. One of the areas I think, is very emergent and early, and I'm curious if you see it with students or even in just your overlap of background of finance plus now, student and labor force and education, is, agentic tech, these self-autonomous agents that now need to interact with commerce, and then they need to spend money, right? So, they have now AIs that you can be sort of self-driving, self-actualizing, and then they actually need an internet native money to be able to buy things, right? To perform the duties on their own. And so, like, where do you see, either with students or just in general, are you seeing areas where, like, AI and, digital currency, digital assets are starting to interact? Like, do you have any view on that?
I've definitely thought about it. I don't know that I've seen it quite there yet, but as you were talking, I mean, one of the things that I've thought a lot about is, could you do a startup company with 0 people, 0 investors, and basically everything is through the agent? So you'll have capital coming from somewhere. You'll have the work being done. You'll have a problem that's being solved. And maybe this is a little too dystopian. So let's think about that. But now let's take a step back and say, okay, we're not going to do this with 0 people, but we could do it with 1, 2, 5, 10. If you look at some of these companies now that are getting huge valuations or exits, the revenue per employee, I mean, it's just going to blow by any metric that we've ever had in the past with software businesses that are incredibly efficient. So that I think we'll see, and that I think the students kind of thinking about, right now. And something else that I've seen come up over the last number of years is every single one has some kind of side hustle, right? If if you don't have a side hustle, how are you in college, kind of thing. So, they've all, I have them write about it. They have to apply for my class, and they all write about, kind of what they did in middle school or whatever. That was entrepreneurial. But yeah, now they are thinking about, how you can do this with kind of 1, 2, 3 founders. And maybe I don't want to take capital in. I want to kind of reap the rewards for myself. Right. So I think we'll see more of that. And that's also why I'm, pretty high on small funds, emerging managers, that are being launched out of VC lab that may be sector specific or geography specific. So there's a number of blockchain ones. So those, for a small fund to get a, multiple fund return, you don't necessarily have to be in one of the 3 or 5 multi-billion-dollar companies that are going to come out of any given year. So I think that piece is interesting. So it may bypass, venture, may be good for angel investors or friends and family, or maybe you don't need anything. I mentioned the one student that's using his crypto gains to fund his company. And I said, that's still your capital, so you want to get other people to validate it, but still, it does give a lot more flexibility. So I think that's what's going to change in students in and coming out of college and workforce and what jobs are going to be like. But I don't take the view that Adeo had that every job is going to go away, because we've never seen that really with anything else.
Yeah, I mean, that actually drives increased economic creation, right? Like the play on the Jensen Huang version of that is, the old model is a couple companies with 10,000 employees. Now it's a company with 1,000 employees, 10,000 agents, and 100,000 other companies created out of it, right? Like, which actually is just a growing of the pie. It's really, really exciting. And then I think you're right, the capital formation may change. The zero employee thing, I think there was some early tests around that with on blockchain with things like DAOs, right? Decentralized autonomous orgs. They've kind of lost favor, but it may be that there's some version of that comes back.
I think though, I mean, the number of companies that I'm seeing now that have, sub 10 employees and like 10 million plus in revenue. I mean, there was one several years ago launched. I had a friend that led the pre-seed round, and I'd been tracking it, and they never raised another round. Like, it's a huge business now, doing 100 million plus. They're self-funded. Like, I think there's huge changes for sure. Steve, I agree with you kind of on the VC side. Like, I think
with DAOs, though, you had people involved; they just weren't part of the company.
Yeah, but that may be later agents. That's why it's like I think the DAO 1.0 world didn't really work, and I question tokenomics, and maybe this will be our segue back into Ripple. But the idea that there is autonomous organizations, that idea, like in an agentic world, is really, really fascinating. And we're seeing them be able to behave. I think the last year was a world where they needed to sort of have very tight roles, but now you're actually seeing agents be able to operate completely independently. And this is also where I think commerce starts happening, because the agent, I know one of the companies, it's like a 10-person company doing $30 million in revenue. They have a bunch of agents, and it's like a marketing company, and the agents literally go out, and buy domains, buy ad spend. They do all of it autonomously, which is pretty crazy. So it's not just one set of work, but they're behaving all the work, and then they're adding in, their own economic process to it, which, means you need an internet native currency. You need sort of how do you, organize the company, all of those things. It's just a completely new way to build business, but there should be more, and that should grow the pie, right? Because Megan, and to your point, if those companies can get that big without additional capital, right? Like that just means more capital can be put to work in other places to then grow even more of those companies. So super interesting. I guess maybe the last, as we wrap up, I do want to cover, you touched it a bunch of times, but I do want to cover kind of like how you view a company like Ripple and, sort of alternative equities. I think someone who's like me, who's been in the space a long time, found my way to I think much more of a Bitcoin maxi view, because of my skepticism around things like FTX and so much rug pull and so many other things that I think have kind of gone against the original cypherpunk starting of a decentralized financial network, an open peer-to-peer network that Bitcoin was. How do you kind of view alternate, businesses that are built on tokens, in the wider context? You've seen that journey now for 10 plus years.
Yeah, I have. And, it was interesting. You mentioned, the cypherpunks and the libertarian view and the no central bank. And obviously, kind of going back to Ripple, people saying, well, okay, you're just moving from one central bank to another central bank. Why should you get to be the central bank? And there were certainly some disagreements from there. And Ethereum came out of there. Vitalik was hanging out at Ripple for a while in the beginning, and then Stellar came out of there, kind of a different view. So a lot of these, a lot of the use cases and the tokens don't really make sense. I mean, they're really trying to force a square peg into a round hole to have a token that's somehow, part of this business. Right. So I think a lot of those, and we've seen this, you mentioned going back, kind of e-commerce, internet companies, mobile companies, if the business doesn't pass the smell test or the narrative test, it's not going to fly. So you really need to think about, why you're doing that token, how it kind of builds your business, how it adds value to the community. And I think, again, I'm not in any single camp here. Yeah. So I hold Bitcoin. I have, for, over a decade, I've had issues with Bitcoin mining and the energy required and the, environmental impact of that. Is it an equitable way? Well, maybe. I mean, the people with the resources can be more successful at the mining. So, maybe that's good. Maybe that's not. Ripple's certainly on the other end of that. Is that fair? Were they, just the smart ones to come up with, this currency that's gotten some legs? I mean, again, you can go into I haven't stepped foot in the XRP forum in years, but, you go into any of those forums and it's just crazy talk, but people just trying to kind of take anything to the moon. So I don't know where, I don't know where that's going. I think we will see, altcoins, and we will see a lot of these tokens that will have tremendous value. The large majority of them will be worth nothing. And you've got entrepreneurs pitching these. And again, why are you doing this? How is this different? So similar to a lot of the, the AI companies that were, running around and basically just putting a wrapper around ChatGPT. Right. There's not, okay, so you got a little bit of a different front end, but what are you really building here? And certainly with a lot of the, earlier blockchain companies, okay, right. Does this need to be on the blockchain? It sounds like a database. We've had databases for a long time. So right. Why is this, why does this have to be a blockchain company?
Yeah. And I think one of the questions I've come to over time is like, does Bitcoin have some sort of immaculate conception properties as, being entirely decentralized? And, there's a number of properties I think that are unique to it. And then there's these other, on-chain solutions that are maybe not disrupting money, but maybe trying to be, disruption to some portion of the financial service network or some other, startup ecosystem. And in some ways maybe looks like an equity. And I guess the question there to me is, in that category, does stablecoins solve a lot of that, right? So, if you're just trying to solve a, simpler way to be able to settle between, say, banks or cross-border, and you're not really trying to create freedom money, but you recognize that maybe the infrastructure is slow and old. Is maybe stablecoin the thing that actually kind of supersedes a lot of those semi-equity looking things?
Yeah, before? No, I think it probably does. And the other thing you got to think about is we're talking about these agentic companies, opening up a bank account. There's friction there. Yeah, they're not going to open. You got to do KYC to open up a bank account, and they're not going to open a bank account for something that doesn't really have a person associated with it. Right, so you could potentially do that with stable coins. So I think, those are some areas that could be pretty interesting. I mean, again, I don't know if we're going to have anything with not, a human involved, but, likely probably at some point.
Yeah, I think that's coming sooner than later. Right. So, and then I think that the interesting thing there is like, where KYC and all of these sort of connections into the system, right? Stablecoin is probably easier to program, sort of digital autonomous banking access. Bitcoin's probably easier to spool up for microtransactions and allow, anybody in the world to do it, right? So you still need to have some kind of access to the system to use a stable coin. So yeah, very good. Well, this has been awesome time with you, man. I appreciate it. We covered a lot of topics.
Yeah, thanks for having me. I love random walks because I don't know where
Because
we
you're a finance professor.
We'll have to go back, but that's kind of the way I teach. I show up to class and I have a plan in mind, but we'll just go where the students want to go. So much more interested in, hopefully the audience here is interested in some of what we talked about, but we talked about so many different things that they probably wouldn't subscribe to the podcast if we didn't hit on any of those.
We'll pick the spiciest one.
Okay.
Spiciest one. So, Steve, this has been a great, awesome. Megan, it's always super fun for us to kind of go back and forth on all these topics. And I guess if people want to follow even more of your kind of expertise, where do they go? Do they just sign up for a class? Do they find you on X? Like, how do people get a hold of you?
Yeah, you can go on an X. I'm at Professor VC. I'm not as active as I used to be, but you can reach me there. Find me on, LinkedIn if you want. But, I'd say, if you're a student at San Jose State or thinking about being a student at San Jose State, definitely come take my class. We're starting a venture capital fund there that's going to be a philanthropic fund. So, looking at investing in companies, and hopefully we can invest in some blockchain companies that, great students or alumni are building.
Love it. Awesome.
Well, thanks, guys. Super appreciate you spending the time with us, Steve. Thanks to all of our listeners, and we'll see you guys next time.
Great. Thank you.